tariffs now. And to discuss that further, we are now joined by Peter Cardillo, who's the Chief Market Economist at Spartan Capital Securities, LLC. Hi, Peter. Good morning. Thank you so much for joining us this morning. Now, of course, the big headline is the tariff deadline that's ending today. So what is your sense? Do you think there could be another extension? While Trump has said there is going to be no extension to this deadline, what is your sense? Do you think there could be another extension? And if not, how volatile do you think the coming weeks are going to be for the global markets?
Well, I think, President Trump has said that he will not extend them, but he did sign an executive order yesterday where some countries are facing another 10% hike, and that goes into effect on August the 7th. So the original 25% to 30% hike on most tariffs supposedly are going into effect today. And so, it's a question of whether or not he will change his mind over the next few days, but it appears that he's determined not to. And now, whether or not this is just tough talk, tough rhetoric, or whether or not it's going to be actual, we just have to wait and see. But the markets are beginning now to get the tariff jitters all over again. We've had a nice run here in the stocks, and that was mostly due to a good earnings season. And most big companies have reported earnings, and in many cases have given a fairly good, rosy outlook. So that's the essence of this rally. But can we run into a brick wall now that we know that the earnings were not a problem? The answer to that is yes, I think we can. In fact, we saw a late sell-off last night, and that was due to the fact that the market is beginning to refocus on trade and what it will mean going forward.
Hi, Peter. Good morning to you. This is Ankita also joining in. I'll take a leaf from what you just mentioned. U.S. markets have been sitting at record highs, especially S&P and NASDAQ, rallying on the back of stellar set of earnings coming in, especially from the Magnificent Seven. But like you mentioned, we did see cuts coming in on the U.S. markets because the market has now started to price in all the trade negatives. Now, perhaps wasn't this in the offing because of the heavy tariffs that Trump has been levying? There ought to be a certain impact on the inflation going ahead, because that you feel has not been priced in till now, because eventually it will start showing in the inflation numbers as well.
Yeah, well, if you look at we saw yesterday. The PCE actually was a little bit higher than market consensus and our own consensus. And we're beginning to see the tariff inflation creep into the system. So with tariffs going higher, for instance, he raised tariffs in Canada from 25 to 35%, which on certain products that are excluded from the Mexico-Canada deal when President Trump was in office the first time. That's going to show up in inflation. So it takes us back to the fact that the Fed remains cautious, and as you know, they did not lower rates. And I think that is going to be a little sticky point for the markets. So entering a new month, which is generally a slow month for stocks, there's a good possibility that unless there's some sort of change of heart on the tariff situation, that it could be a bumpy ride.
That's right. All right, so let's see if that change of heart happens on the tariff front. Well, yes, all eyes on tariff and any inflation impact because of it going forward. Thank you, Peter. Thank you so much for joining us. On that note, we'll let you go. It was great chatting with you. All right, then let's shift